Welcome to Discovery Watch with John Kaiser.
I'm your host, Jim Goddard. John, welcome back to the show.
Jim, pleasure to be back on the show.
John, Great Bear Resources is down sharply in recent days. How is the Dixie discovery coming along?
Well, Jim, you could have asked the question at the end of May, why was Great Bear up sharply then? The company's in the midst of a major drill program. It's got a $45 million drilling campaign. The last it published results for 318 holes out of a planned 400 holes. They are in the final stretch of having everything together for a maiden resource estimate. The Dixie property is, of course, south of Red Lake. It emerged in 2018 as a brand new discovery. Started off with the high-grade hinge zone, which is more Red Lake-style mineralization. But what really got the market cranking and is supporting the sort of $800 million to $1 billion valuation that it's had in the past 12 months is the LP fault. It's a deep-seated fault. It's connected to an even deeper crustal scale fault that fed the Red Lake district, and that, of course, ended up getting a lot of gold. And they recognized this in 2018 and staked a whole, 20-kilometer stretch of it. And it has two styles of mineralization. So one is the hinge zone Red Lake style, and that's quartz vein with a very flashy high-grade gold in it that makes wonderful core pictures. And then there is the disseminated mineralization associated with the structures, the secondary structures that come off the LP fault system itself. And the structures themselves have very high-grade gold in it, but they also have broader envelopes of low to moderate grade mineralization. And this is what the story is really all about. The old Red Lake style stuff has faded into the distance. What it's now is the possibility that this could end up being a 10 to 20 million ounce system, and they've invoked Hemlo as a potential analog. In the beginning, they talked about a Timmins district scale system of all these high-grade gold systems associated with a major fault system. But now they're really looking at developing a potential bulk tonnage scenario that could be open pit mine for the shallower resources. And of course, this type of orogenic gold system goes quite deep, so they can chase high-grade gold down substantially deep. Now, the stock spent April and most of May sort of sitting in that $14 to $15 range. Gold was sort of bumbling around in that $1,700 to $1,800 range. But in late May, gold shot up to almost breach $1,900, and that helped the stock suddenly wake up, and it popped up to $17. And what's happened in the last few days is that all the hand-wringing about the inflation driving up gold in the first place, the Federal Reserve finally admitted that the inflation may not be as transitory as one would think, given the way everything had slowed down in 2020 due to COVID, and suddenly you have a surge of demand overwhelming the capacity of supply to mobilize itself to meet that demand. Now they're worried that all the money printing that's been done in the past decade is finally going to come home to roost and bring systemic inflation in. But they talked about, we're going to start maybe tapering our bond purchases, and you can expect by late 2023 a couple of interest rates hikes. The interest rates are still very low, and why anybody should care about higher interest rates in 2023, which is 2 years down the road, makes no sense. But gold, in the past couple days, has lost $100, and this is what has pushed Great Bear down. And it isn't just gold stocks; it's everything across the board, whether they be base metals or critical metals. There's suddenly this knee-jerk reaction to the idea that inflation will not be allowed to run away indefinitely and bring back something like the 70s stagflation period. We're in a different type of situation. We have inflation coming back because there's an imbalance between demand and supply that was artificially created by a pandemic, not by overprinting of money. So everything's going fine with the Dixie project. The current valuation of about $850 million at a $15 price. There's only 57 million shares out. If you use my rational speculation model and take the stage which it is at now, which is discovery delineation, fair value of the ultimate outcome should be 2.5% to 5% of that outcome. And if you take that sort of number, then you end up with a future value of $24 billion, which really would require definitely a Hemlo scale discovery, 22 million ounces of 8 grams per ton or so. The initial resource estimate is not going to deliver anything close to that, but it will be a stepping stone for further work and increases to the ultimate resource estimate. But what the stock is now in is what's called S-curve territory. The rational speculation model is a theoretical framework where you're a mathematician and doing everything properly. You would only want to pay a substantially lower amount than the $2 billion that might be worth at the end of the day. But the S-curve is an empirical observation that when a significant new discovery is made, there is a tendency for the market to somehow figure out through the peak pricing during this period a valuation that is roughly equivalent to what the project ends up being worth after it's marched through all the rest of the stages in the exploration development cycle. And right now, if you take that limit, the S-curve limit, and take the current price as that limit, it's saying that the project's going to be worth about $1.2 billion at the end of the day, which suggests that it's going to go maybe up to $21 if you hang on long enough. But the Great Bear situation, we may not be at the peak of S-curve behavior because we're still early in figuring out what are the limits to this system. So we could see a higher valuation come after the initial resource estimate is out, especially if the market is clear that the geological context is much bigger than that which is so far covered by the resource estimate. So absolutely nothing wrong with the Dixie project. It's marching along. They produce both high-grade and low-grade assays, but the market doesn't really care about these results anymore because it's seen so many of them, and they make no difference until there's a resource estimate. How many tons, how many ounces in the ground are there? Where's it going to go for here? And that's also what the institutional audience is waiting for. It wants to see harder numbers as to what this is all about, and then you'll see this thing come to life because once you publish the initial resource estimate, you can still do additional delineation drilling and you start doing metallurgical work. It starts to become a more serious project. So that's what we're waiting for. It's a major milestone coming up. And the market in the meantime, since it has nothing really to make a concrete valuation on, it trades stocks like this as a greater fool, momentum type play. So gold is up $100 one week. Yes, let's go buy a gold stock like Great Bear. Oh, it's down $100. So let's sell this stock right now. And everybody else who's interested stands back and wonders, oh, how low is gold going to go? The gold price doesn't matter. Gold's not going to zero the way Bitcoin potentially could when somebody pulls the plug on all the computers that run the Bitcoin. Bitcoin is just a flash in the pan. It is an asset class designed for momentum trading, for greater fool type speculation, whereas gold is a solid asset that sits there. It's squirreled away in people's little hiding places, vaults, safes, whatever around the world. If something happens to the global economy, it's still there, whereas the Bitcoin asset class could just evaporate as if it never existed.
We'll have more with John Kaiser right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with John Kaiser. John, what's the status of Goliath Kwai project in Ontario?
Well, Jim, I introduced the Golden Goliath to Discovery Watch early last year in January because it owns about a 10-kilometer segment of the Packwash fault structure. And this fault structure sits to the south of the LP fault structure that is the basis for Great Bear's $800 million to $1 billion valuation with potential to become even bigger. So the key to the Packwash structure is that a lithoprobe showed that this fault structure has deep linkage, crustal scale fault that feeds the Red Lake district, and it also clearly feeds the LP fault system. And then there's a branch that feeds the Packwash fault, the SLF fault that's a little bit further to the south. But what's missing from the Packwash fault is evidence of gold mineralization. And that, of course, was missing from the LP fault also for many decades. Yes, the Dixie Zone with Red Lake style mineralization, that had been explored and found, and Newmont ended up owning it and gave it away to Great Bear Resources for next to nothing. And in the course of re-exploring that project, the surrounding area, they ended up recognizing the LP fault structure, which was always there. So the hope with Golden Goliath, was that the Packwash fault structure, which is covered mainly by overburden, very little outcrop, and no historical work drilling at all because there was nothing really to focus a target. The hope is that it is something similar to the LP fault. And last year, this caught the market's imagination, and by September, they were able to raise $3 million and get a drill program going. They were focused on the western grid. During the first quarter of last year, they had done some golden till sampling that showed a golden till anomaly to the west of Beauregard Lake. And there was also one in the eastern part, and they'd done IP surveys over that, and it showed that, yes, there are these chargeability highs, east-wind chargeability highs that could represent disseminated sulfides, and that gold could be associated with these disseminated sulfides. So they started a drill program on the west grid, and they drilled 14 holes, and by December, the results were starting to come in, and they were like not even reporting gold grades. They didn't even report no significant grades. They just kept talking about the sericite schist that they were intersecting, but there was no gold there. And what the Kwai project needs is evidence that it has also been pumped by gold-pregnant fluids via that fault system. And once that evidence is there in the market, then the speculators can come in and say, well, you throw enough money at that, and then you'll eventually outline a significant gold system. And this company, with its $180 million fully diluted, trading at 7 cents, it's got a very low valuation, $12 million or so. So the upside from a speculator's point of view is substantial. Now, as they were scratching their heads about the absence of any gold in those first 14 holes in the west grid, and wondering where's this golden till coming from, and some of the grains are pristine, so they didn't get dragged away from, say, up in the LP fault area about 15 kilometers to the north. And then they realized that the ice direction in that particular local area may have been from the east due to some topographical high around which the glaciers flowed, so that the debris that they were picking up was channeled from the east rather than from the north, which might explain why those the west grid structures do not explain the Golden Till anomaly, which is just to the south of it. So with the winter program, they went back in and drilled 10 holes, and they focused on the eastern side of the Beauregard Lake, the North Shore and the South Shore, and they drilled 10 holes. They've gotten results back for 7. There are still 3 holes pending. 6 of the 7 had nothing in it, so it was more frustration. Yes, we have the right host rocks. This should run gold, but of course you need to find where exactly the gold did concentrate. But they did get one hole, number 21. It had a 1 meter interval of 0.824 gram per ton gold. Now that is nowhere near ore grade, and it might be if you had 200 meters of that, but at that width it isn't. But it was the first evidence that there is gold in this sericite schist where the sulfides are present. You cannot see this gold. It is not the kind which makes for great photographs of visible gold, free gold in the core. This you have to assay. So they never know until they get assays. But now but by the second week of July, they are returning with a 3,000 meter drill program, 15 to 20 holes, 150 to 200 meters each. And the first 4 are going to bracket this hole 21 so that they can see what the structural controls are. They've been mainly chasing IP anomalies that are parallel to the Packwash fault structure, which runs east-west. But the gold mineralization may not be in these parallel zones. They may actually be in these splays that curve away from the main structures. So they need to get a better understanding of the structures within this area and see which ones control the gold mineralization. So this program, it starts in several weeks, and it will start with the hole 21 and drill more holes along the eastern part of that peninsula area. We're still waiting for the 3 holes on the North Shore. They pass through massive pyrite. They don't think that will run anything, but they're quite intrigued by the rhyolitic rocks that are on top of that. They have more targets to chase on this property, and the story hasn't really vindicated the market's hopes. We're now at the stage where market says, well, call me when you get the gold intersection. And that's where we stand right now. They're going back in there. We have $2.2 million in the treasury. The current budget will leave them with more than $800,000 at the end of the year. There's a bunch of warrants at 10 cents that could raise another $760,000 if the stock gets a speculation cycle going. So yes, Golden Goliath is still alive as a Discovery Watch candidate, and the current price, 7 cents, now up, actually represents a better entry point for the market than earlier when we had no idea what sort of rocks underlay this, all the overburden in that project area. And we now at least have a smidgen of evidence that gold did enter this system and that the Golden Till likely is locally derived and not from some distant source such as Great Bear's LP property.
We'll have more with John Kaiser right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Welcome back. We're speaking with John Kaiser. John, Eagle Plains is a prospect generator farm-out favorite of yours that's been featured on Discovery Watch for 3 different projects. Where do we stand with them today?
Well, Jim, I introduced Eagle Plains with the first project in early 2018. It was the Fisher project, which was this very extensive property south of the CB mine and Santoy mine that SSR had acquired. And SSR ended up doing a deal on the Fisher project to earn up to 80%. They spent over $12 million. But what Eagle Plains did was, once it had this deal in place, it spun out Taiga Gold to the shareholders on a one Taiga for two Eagle Plains shares basis. And we are still covering the Fisher project and Taiga Gold as a separate story in our Discovery Watch program. And the SSR finally vested for 80%, gave Taiga the $3 million. They're now in an 80-20 joint venture, and there's a drill program going on starting on that project. And hopefully they end up getting some of those sexy intersections that make SSR say, okay, it's time to take out Taiga Gold. Taiga Gold, meanwhile, is busy drilling its 100% Orchid project, which is to the south of this area, and they have about 10 holes that they drilled, and they're waiting for assays on that. But Fisher is not part of Eagle Plains, though Eagle Plains still owns shares in Taiga Gold. It would benefit if Taiga Gold ends up being swallowed by SSR. The second project was the Iron Range project, which I introduced in mid-2018. The Iron Range is in southern British Columbia, and this is an area that has potential for a Sullivan II type of discovery. And a decade ago, one of the companies that had auctioned it from Eagle Plains pulled a very interesting hole that sparked the market's excitement. Even Eagle Plains, the underlying prospect generator farm-out company, ended up rising in price on the backs of this. But further drilling did not really pan out and show that this was a significant discovery. And eventually the junior gave the property back to Eagle Plains. And Eagle Plains, in the meantime, had worked out a hypothesis as to where some very strategically placed holes could discover what this original discovery was really all about. And this is what I like about Eagle Plains as a prospect generator farm-out company. As that in itself, it's kind of a boring company because it always ends up with like 15%, 20%, 30% net at the end of the day. But every once in a while, the company bucks the rule of always farming out drilling to another party. And in this case, they decided that we needed to drill those holes, and we talked about it, and they did drill those holes, but the geological hypothesis was wrong, and the low-hanging fruit disappeared, and that project has been farmed out to a private company. It's supposed to spend $3 million over 4 years, but they're only planning geophysical surveys this year, and with 15% net or whatever to Eagle Plains, we don't really care about that project anymore. And last year, they took another project, the Vulcan project, which they had assembled over a fairly long period. Various groups had explored it. It's also in southern BC, and it has evidence of Sullivan-style mineralization, zinc, lead, silver. And the controversy with this project was where exactly was the Sullivan time horizon within this tilted stratigraphy, and they weren't never really sure, and everybody was puzzled as to why they just couldn't find Sullivan II within this land package. And they had to do a geophysical survey, which ended up showing an empty anomaly that they said, wow, this thing's close to surface, it's near the road, it's going to be cheap and easy to drill, it's potentially low-hanging fruit. So in April last year, we introduced the Vulcan project, and they did drill this target. They killed two birds with one stone. Unfortunately, the target turned out to be a gabbro intrusion, which for some reason had graphite in it, and that made it also be a conductor in addition to being magnetic. And that was, of course, not what they were looking for. But they did get the answer as to where the Sullivan time horizon is within the stratigraphy, and that's of value to a future explorer who wants to put big bucks into this and sort out where a Sullivan II deposit might be hidden. And they farmed that out to a private company which plans to go public with it sometime in the future. However, again, there's only geophysics planned for 2021, so we don't care about that project anymore. But they have now a fourth project, which they call the Donna Project. It's also in southern British Columbia, about 60 kilometers east of Vernon, in an area called the Mountains. It's an area where in 1871 placer gold was found in the upper reaches of the Kettle River and other creeks in that area, such as Cherry Creek. And for the past 100 years, groups have tried to find the lode gold sources for the placer gold. They haven't really had any success. They found these smallish zones, and the general perception has been that there's gold in them hills there, but it's all smallish zones, and in the modern world, the size just isn't there to make up for exploring. But the Donna property, which itself started receiving attention in 1974, it has a group of 4 Crown Grant claims that were created way back in 1914, and it was mined on a very small scale from 1914 to 1961, and they were called the St. Paul and Morgan mines, and they only dragged 392 tons out of the workings, but they had really interesting grades: 14.4 gram per ton gold average, 287 gram per ton silver, and combined 1.2% lead zinc values. And Tim Termuende of Eagle Plains, they picked up this Donna project, the surrounding project, in 2016 from a junior that was involved in Athabasca uranium exploration and wasn't really interested in pursuing this gold potential. They farmed it out to another junior that rented it for a while but then gave it back last year. And the company was very happy to get the Donna project back because the St. Paul and Morgan claims, the Crown Grants, they had been stuck forever in some sort of estate limbo, and Eagle Plains was finally able to get a deal to acquire those claims. So that hole in the middle that has this high-grade mineralization and that's never been drilled, they now own it. It's part of the Donna project. So they said, we have to do some conceptual drilling underneath these old workings, find out what the geology is, because we think that, this being the Quinella terrain that hosts all these great British Columbia porphyry systems, we think that this is the same, and we think that deeper down there may be some major systems in this Monashee district area. And right now they're using the term intrusion-related gold system. They think that these various showings that have been nicked here and there are sort of peripheral aspects of a major system. So this program they're doing of 5 to 7 holes, 1,500 meters, it's small, but they're funding it with their own nickel. And, if they get lucky, they might intersect something very exciting. But what they're really looking for is geological context to put together a case that this entire region has potential for big systems at depth. And that's, of course, going to require big spending if they can come up with the geological evidence to justify doing so. And this is a prospect generator farm-out company, but they have the option of also spinning out a project that is 100% owned, do that in conjunction with a financing whose money is earmarked for that particular project on a 100% basis. They own a total of 6 projects or claim blocks within this Monashee district that are sort of scattered around, and they could assemble together an entire district play. So this is an example of a company with about 150 million issued, trading at 15, 16, 17 cents. They have $5.7 million cash and about $4 million worth of stocks in about 16 different companies, including the Tiger Gold position. So this is a solid little junior that motors along, and this Donna drill play, you're in essence getting it for free, because if this is a bust and they say, there's nothing really there, it doesn't affect the stock price at all. But if they start to deliver some results that show, hey, this really has potential for a significant discovery, then you will get upside reward. And that's the beauty of prospect generator types that are willing to occasionally buck the rule and not farm something out, to do some work on their own 100%. And to be frank, these days, if you're going to be a prospect generator farm out company, it's not good enough just to do some surface work with geochemistry and to fly some geophysics and sort of say, well, here's some smudge at the surface and then here's, some anomaly at depth, and here, go to it and drill it. Now you have to look into the third dimension, because the best prospects are not so obviously good at surface, and so you need to prospect with the drill. Get the geology, get the alteration envelope, get some evidence showing that, hey, we're on the edge of something significant, and then farm that out to the sort of juniors that want a promotable story. Because this whole business of taking a project, where there's just so-called property of merit, it just gets rented by these juniors who use it as a stepping stone, put no real money into it, discard it as soon as they've latched onto something sexier and start promoting that. And that isn't really helpful to a junior like Eagle Plains. So taking on this monosheet district play, trying to demonstrate that this is worth some serious exploration dollars because there's stuff at depth that's feeding this inconsequential stuff at surface. That's the kind of strategy that prospect generator farm out companies should be involved in.
John, thank you so much for the update.
You're welcome, Jim.
I'm Jim Goddard. We've been speaking with John Kaiser, his website, kaiserresearch.com.
Comments made on Discovery Watch are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at howstreet.com. Discovery Watch is a production of How Street Media Incorporated.